I mean, monetary policy around the world is unhinged. It's completely subject to different human theories about how monetary policy should work. You've got the monetarist school, the Keynesian school, the Austrian / supply side school. But then you have on the other side of it, it's not just monetary policy, it is politics that influences monetary policy around the world. So it's not independent around the world, maybe a little more so in the United States than in other places. But I just think pure politics is much more of an influence than many people appreciate.
So far, so good. These words are probably a fair assessment of Europe's progress thus far in its struggle against inflation. Policy interest rates have been raised resolutely, central banks have signaled a commitment to keeping them high for as long as necessary, and inflation is down sharply from the double-digit highs of last year. Underlying inflation, however, is proving more stubborn than headline inflation, which includes energy, food, and other more volatile items. Bringing it back to target durably remains a matter of urgency. Entrenched high inflation is distortionary. Moreover, prolonged inflation means prolonged high real interest rates, which would hurt private and public investment and therefore future growth. Cathie Wood further explains this in detail in the video below, comparing the situation to the 60s and 70s. She also points out the political influence on monetary policy and why Bitcoin remains the safest bet for anyone cautious of their financial safety. Let us now hear what she has to say.
If you look back to what happened in the 70s, and many people fear that we are in a period like the 70s now, especially hearing all of these wage negotiations and settlements, 10% per year, that feels very 70s. I personally do not think we're in the 70s, but just to help people understand what can happen when you basically unhinge monetary policy, close the gold exchange standard. The lack of discipline started in the 60s, actually. Vietnam War and Great Society. So guns and butter. The government could pay for everything. Sound familiar? Sound familiar, right? And what happened back then is over 15 years, the Fed accommodated profligate government spending. So it just started with Vietnam and Great Society, and it only got worse. So that was a 15-year plus period by the time Volcker got in, and he had to crack the whip, namely starve the economy of money relative to what it had been used to. We ended up with double-digit inflation, and I remember with surtaxes, businesses had to pay in interest more than 20%. That was just a killer. Inflation was absolutely destroying purchasing power. So, and I remember my father back then. I remember my dear father back then, talking to me about it and talking to my mother especially, and I would overhear these conversations. My paycheck, we can't buy as much food. This is terrible. So why is it not the same thing now? Because we have profligate spending in the U.S. and the debt levels are just incredible. Part of the reason is I think monetary policy is making a different mistake. So M2 growth is negative on a year-over-year basis, and that means the Fed is not accommodating this government spending. But what it also means is the government spending is going to crowd out the private sector. And I think you're beginning to see that happen now. We think there's going to be a harder landing. We learned a very important lesson. We had regional banks, stocks plummeting, some of them going bankrupt. And Bitcoin rose from 19,000 to 30,000. What did that tell us? It tells us that because of the decentralization and the transparency in the network, that counterparty risk is not an issue for Bitcoin. And so there was a flight to safety into Bitcoin. Think about that. As bank stocks were plummeting. That spoke very loudly to me. And I think the other reason people have been reticent is they heard about FTX. And if they think about FTX, though, FTX proved the point that you really want to be involved with a Bitcoin network and not something like an FTX. Why? Bitcoin is transparent and decentralized. FTX was completely centralized, completely opaque, and a fraud. Sam Bankman-Fried did not like Bitcoin.
Right.
I understand why. He thought he was a master of the universe and could control everything. Well, he couldn't control Bitcoin. And that's its beauty. That's its beauty.
The SEC was rebuked by a court in August for how it rejected Grayscale's application to turn its Bitcoin trust into an ETF. The regulator won't appeal that loss, a person familiar with the matter said Friday, boosting the odds the Grayscale Bitcoin Trust, GBTC, can be turned into a more appealing ETF. Bitcoin's price jumped on the news. The Securities and Exchange Commission won't appeal a court's scathing reversal of its decision not to let Grayscale convert its Bitcoin trust into a more investor-friendly exchange-traded fund, according to a person familiar with the matter, possibly clearing the way for the first Bitcoin ETF in the U.S. The markets regulator had until midnight Friday to decide on challenging the court's decision, but the SEC will let that deadline come and go without appealing, the person said. Reuters reported the news earlier. Bitcoin shot above $27,000 after the news came out. In August, the D.C. Circuit Court of Appeals ruled that the SEC's denial of Grayscale Investments' application to convert the Grayscale Bitcoin Trust, GBTC, into an ETF was invalid and must be reviewed, calling it an arbitrary and capricious rejection. The court said that federal agencies are required to treat like cases alike. The Securities and Exchange Commission recently approved the trading of 2 Bitcoin futures funds on national exchanges, but denied approval of Grayscale's Bitcoin fund, Circuit Judge Naomi Rev said in August. SEC spokespeople didn't immediately respond to a request to confirm the agency's decision. A Grayscale spokeswoman declined to comment before the decision is confirmed. It's unclear how the SEC will proceed in its next round with Grayscale's application. The agency still have the authority to deny it for other reasons besides the ones courts shot down, though Grayscale could challenge those again in court. Grayscale first applied to convert its closed-end fund into an ETF in October 2021. GBTC is the largest cryptocurrency fund in the world and has been trading at a discount to its Bitcoin holdings since February 2021. That discount reached almost 50% at one point but has since retreated to levels around 17%. Grayscale has long advocated that the conversion of GBTC to an ETF would eliminate the discount as it would close the gap between the price and the underlying Bitcoin. The structure of ETFs allows for a creation-redemption model, which means new ETF shares can be created to meet demand or redeemed to reduce supply. Do you think this would be the last straw to break the back of the SEC? Let us know in the comment section below. Also, don't forget to hit the like button, subscribe, and turn on notifications. Thanks for watching.